Welcome back. You're watching Markets at Noon. Before we move to the next segment, viewers can't just wait to show you the charts of Nifty because it is doing real good, positive 25 to 400 as we speak right now. It has touched 25,400 mark. And at present, we see the same levels, nearing those levels for Nifty with absolute strength. Talking about Bank Nifty as well, 56,978 with a 362 points gain in the Banks and Financials Index as well. Moving ahead, let's just not talk levels but talk large on the markets, talk about the investment rationale on the market. And to talk large with us, we have a well-known market expert, Sunil Subramaniam. Sunil sir, welcome to ET Now. Mansi this side. It's a pleasure talking to you here. Sir, first things first, the markets are doing really great. Benchmarks as well as the broader markets, we have good opportunities. But no matter how much the Indian markets show strength, the FIIs, foreign institutional investors, are not coming back. Now, do you think the nervousness of FIIs is temporary and they will also come back to Indian markets just like the DIIs?
Yes, I do think so. I think the reason you're saying that is that over the last 6 months, there has been so much geopolitical uncertainty, right? And specifically, I mean, apart from the tariff situation where it does affect India, the Indo-Pak war, which of course was India specific, and then even in the Israel-Iran war, there was the oil price spike and the fears around that thing. So as a result, I think India specifically, from the international, there has been news which has given rises to concern on the short-term implications of this geopolitics on India, right? I think that's why if you compare with the previous time when the Hamas attack or the Russia-Ukraine war, the Indian markets, FIs were not so nervous because it was a bit distant away from India. But this time it's a bit more closer to home, especially considering oil. Now that a ceasefire looks very probable, and so from the fact that right from the budget onwards, you had only positive news around the India front coming through. But the FIs have not been able to take advantage of this because they were worried. For example, oil has a big impact on multiple sectors, fiscal deficit, everything. So when you look at an FII, right, they largely look at India as a stock, right? And when you put in the risk factors in the stock, oil has a big weightage there. So it's very hard for an individual FII to go against the numbers because they do a lot of algorithmic trading, So the computer feeds in a lot of negatives on India, which is perceived to be negatives. And until they get clarity, they cannot take a call, right? But now that the oil situation looks to be easing, right, from an uncertainty point of view, I think that the FIIs are poised to come back to the country in a reasonably big way. But there still remains one uncertain event, which will probably be the final trigger, post which I expect a flood of FII money to come in. And that's the signing of the BTA. Because I think that's still an uncertainty because the US has gone ahead and signed with the UK. They've kind of done a deal with China. But with India specifically, there's been a lot of action. A lot of bilateral trade meetings happening, both the initial Modi-Trump meeting and even the latest one, Mr. Trump said, I'm going to do a trade deal with Modi, but it has to be signed and delivered. And we have July 2nd is the 90-day pause coming to an end. So to that extent, I think FIS will still be a bit cautious because they wouldn't want to take a sector call because on which sector will India come a winner and which sector will US extract some concessions from India is still out in the open. So to that extent, they would not like to take that risk now and they rather wait for the uncertainty to go away before they come back. Otherwise, domestically, there's nothing that is a hindrance to their coming in. A very supportive RBI through multiple actions, a supportive fiscal action through putting money in the hands of the middle class, a good monsoon forecast, as well as the ground level GST numbers, the PMI numbers, all of which are coming positive. So I would say purely looking at a prominent, and that's why domestic fund managers this month have come and deployed their cash in a big way. They were also uncertain through the earnings season up until the end of May, waiting for that. And now those earnings have come out. It's seen that sequentially all the earnings have done better. Yes, against expectations, it was mixed, but at least that uncertainty is behind now.
Exactly, point taken here. Ankur this side. I want to understand one of your comments which is made on oil front. You mentioned situation has eased. Even the price is showing the same. But on the sectors like paints, aviation, what outlook do you hold now? Do you think it is the right time to enter or should one wait and watch?
So I think that, see, when you look at it purely from an oil related perspective, right, you would say an easing would make sense. But the point is that that's only one part of the aviation, the paints. It's the demand side of the business, right? And I think there is no concern. I see aviation demand really going through quite well. And then you've also seen paints as a part of discretionary. I expect it to do well with the housing sector gaining momentum. So yes, given that this uncertainty has led to some volatility in the price, it's a good time to accumulate those stocks.
Right, and I in fact second the thought there, Sunil sir. Oil did a lot of hop, skip, and jump, and now if we see it is settling somewhere around $68 to $69 a barrel. But having said so, if one is considering creating a portfolio, doing investment for a longer term, how do you think should one create a mutual fund like portfolio in the market uncertainty? Yes, the undertone of domestic market is certain, the undertone is bullish, but what are the sectors one should consider?
So I would put this into two buckets. The first is a portfolio for a 1.5 year period, and the second is a portfolio for a 3, 5, 7 year period. The reason I'm separating these two out is because it's in the short run, there have been sectors which have underperformed over the last 6 months. And I expect them to play a catch up, especially where FIIs have interest. Because as we just spoke, I expect FII return to happen in a big way post the BTS signing. So from a shorter term perspective, my vote would be to go for IT. I think even on the show here, I've been saying that last couple of weeks, 3 weeks back itself, I spoke that I changed my view. And now if you see on a 6-month basis, the underperformance of the Nifty IT index is about 10% to the Nifty. Whereas just a few weeks ago, it was 17%. So already there's been a 7% catch-up rally, and I expect this to sustain. And so IT is one of the, from the next 1.5 year call, I would say IT is a big pick. The second would be private sector lenders, whether they are private banks or good quality NBFCs or even gold financing and other companies. Because I think the impact of the tax breaks plus the RBI rate cut in terms of the reducing AMIs will be felt within the realty, auto, consumer durable space. And I think it's there that the private
Mr.
lenders
Subramaniam, I'm sorry for interrupting in between, but due to paucity of time, I'm doing the same. So thank you so much for joining at this hour and giving your valuable advice. But moving on